and gentlemen, we're going to break down what's coming next for Tesla stock in just a moment. But first, I do want to share this clip with you from Tom Lee, where he breaks down the bull case for markets into year end. Because let's face it, Tesla stock is heavily correlated to the broader markets. It tends to outperform when times are good. It tends to underperform when times are bad. So if markets generally go higher, that means Tesla is probably going to go a lot higher. Tom Lee also specifically shares his thoughts about Tesla, calling Tesla undervalued.
Tom Lee is our headliner today. He joins us now. He's the managing partner, of course, and head of research, also a contributor. It's good to see you again. Thank you again for helping us guide our investing viewers through election night. It was good having you. So what do you make now? You've had a chance to digest a little bit of what's happened. Yesterday was, felt euphoric. Now what?
Well, first of all, Scott, thank you for having me on election night. It was historic, and I really enjoyed it. The move yesterday, 3%, the best move in the history of any post-election rally, I think needs to be respected because it really highlights one of two things or both. One is that there was so much de-risking into that election. Actually, it was unusual. We actually fell 2 weeks into election day. That happens like about a third of the time. And the second is that animal spirits could be unleashed because of the interest and belief that there's deregulation and mergers and a pro-business environment. So I think it's a very respectable move, and I think it sort of argues we have 5 to 10% upside into year end.
At what point, though, do you get on board with Barry Bannister's idea that the train could be leaving the station heading, full speed to Crazy Town?
Well, he's sort of structurally correct that, this market top is not going to be because of someone's going to have a problem with PE or because a recession's going to happen. I think it's very likely, in the next 6 months, the top is because either firepower is exhausted or expectations have become unhinged on markets. We can measure either, right, we can look at margin debt. That's just been flat for the last 4 months. So the market's been up and most investors have been de-risking. That's fuel for me, upside fuel. And when you look at sentiment readings, it's not extreme. In fact, the VIX was elevated and only normalized yesterday. So I don't think sentiment's extreme.
Gosh, I was just going to ask you about the VIX. It's funny you went there. I'm staring right at it. I mean, it's down 30% on the week, at just a full-blown collapse, right? Don't forget, we were above 20. I think we were at 22 at one point last week. We're barely above 15.
Yeah, it was actually very interesting to look at the VIX futures curve. But on election day, the VIX futures curve was over 20 all the way through August of next year. It should be around 15, 16. The markets were pricing in tumult and uncertainty for like 9 months, 10 months. So I think there's a huge amount of re-risking taking place. I don't think people got their exposure yesterday and today.
I mean, look, you I know, thought that we wouldn't know the outcome of the election for many weeks. I think that was your base case coming in. So I think there's a lot of surprise, rethink, as we look at where this market might be able to go. On that note, you do have a new ETF, which I want to talk about. It's called the FundStrat Granny Shots U.S. Large Cap ETF. Granny Shots being that you think these would be a little bit easier to make, right?
Yes, that's right.
How'd you build it? We're talking about names. I hope we show this. I think we have produced this up. Tesla, Goldman, JPM, Johnson Controls, Caterpillar, Emerson, TransDigm, Eaton, Oracle, Ingersoll. That's the top 10. But how'd you build that?
The Granny Shots ETF is really built upon the research model we used at FundStrat. That was a thematic core stock portfolio that we had been using since 2019, so for 6 consecutive years. It takes 7 what we consider relevant market themes, and it finds the most correlated stocks to those themes, whether it's AI or millennials or Fed easing or improving PMIs, and then the stocks that appear in the most frequently across themes are our Granny Shots. And Granny Shots is named after Hall of Famer Rick Barry's way of shooting free throws.
Some of us do remember that. We definitely do. Tesla's the number one stock. The weighting is 3.25%. you want to just talk about the move in that stock this week and what it means to you in context of how you've built this and where you think it can go?
Yes, Tesla has, in our research product, had been appearing since inception, since 2019, because that company has a hidden asset, which is its AI and intellectual property. And now, of course, the intellectual property built around all this infrastructure they own. So it's a company that, to us, looks undervalued because people look at it as a car maker and look at current margins and earnings. But as we know, there's a lot of new initiatives, whether it's robotaxi and robots, and now, of course, there is a political angle that you guys well discussed, and I think it can only help Tesla.
Tom, be well. We'll talk to you soon. Appreciate you. It's Tom Lee, Fundstrat.
And that's exactly it. I've been under the expectation that at some point over the next couple of months, when the conditions were right, Wall Street would start looking at Tesla with the longer term lens instead of the short term lens, instead of the what's delivery is going to be next quarter or the quarter after that, and start looking at Tesla from the prospect of robotaxis, which are now going to be launching in 2025. We're all looking ahead to 2025, and that's one thing that you can look forward to in Tesla stock, not to mention Optimus and whatever other things that Tesla could obviously branch into over time. None of that is currently in any kind of material way being discounted into Tesla stock today. And this could mean a re-rating of Tesla stock. As Tom Lee said there, he's expecting 10% upside in the S&P into year end. That could look like 20 to 30% for Tesla. And that could, just by those metrics, put Tesla somewhere in the neighborhood of $355 per share to about $382 per share. That's actually not that far away at this point. That's about $58 of upside to get you 20% upside from here. And that would be about $85 of upside to get you to that 30% higher mark, which again is really not that far-fetched, especially if Tom Lee's correct and animal spirits start to become more prevalent in markets, which there is a setup for that. Like, the setup is good for that, to get a lot more momentum into markets with a strong economy, with inflation that continues to trend lower over time, and the Fed ultimately green lighting what appears to be a bit of a give back in those higher yields that we have seen in recent weeks, and not to mention the election and Trump having favorable business policies. When you add all of this together, Tesla stock could go much higher than where it is today with reasonable certainty. Now, would you bet the farm on that? Obviously not. But there's a good chance that things go much higher here for Tesla. Tesla's RSI is currently sitting at 71.27, barely on the overbought side. Now, when Tesla does go overbought, sometimes it can get into the 80s or 90s. And if we were to see an 80 or 90 reading on the RSI at this point, that would likely be another 10+%, 15, 20% upside from here. So it's really not far-fetched at all to see some pretty extreme upside. Now, as I talked about in the last video, Tesla's short interest of free float sits at 2.84%. You have about $23 billion currently sold short in Tesla stock today, and short sellers are taking about a $700 million loss yet again, following their $2.8 billion loss in yesterday's trading day. You still have 79.32 million shares that are sold short, but here on the day today, it says 3.51 million shares have been borrowed, right? Have been presumably sold short. So it doesn't even look like you've started to see a short squeeze. It kind of feels like it if you look at the last 2 days, but the data does not show it. And if we haven't even seen an actual short squeeze yet, what do you think the next couple of weeks could look like? Especially as Wall Street starts to chase year-end returns, because it's all about clients. It's all about posting returns. If you are underperforming the S&P right now, you are going to be chasing markets. And kind of as Tom Lee has said over the past couple of weeks, there is now a strong reason to put some money to work. there's more certainty, there's less uncertainty, and markets tend to like that. And again, if you're a fund and you're up 12% of the year and the S&P's up 23%, you probably are going to be chasing this market. And there's plenty of fuel on the sidelines that could push stocks much higher than where they currently are. So with that said, let me know your thoughts on this down below in the comment section. I do think it is highly likely that at some point over the next couple of days, Tesla breaks above 300, but that break above 300 could push this stock to much higher levels. The last time Tesla decisively and definitively broke above $300 per share was back here in 2021, and Tesla stock the next day after that break of 300 went up 12.5%. If we get the right news right now, it's off to the races. In fact, the last time we broke above 300 was, again, here October 25th, 2021. Tesla stock did end up running about 37% up to its all-time high. So I think anything's in the cards above 300. We could probably expect some resistance for a period around 300, just because that is such a big level. Here on the day today, you kind of topped out around $299.74 per share. So expect, some resistance at 300. But if we don't get that, then just be pleasantly surprised that the stock goes higher, and probably much higher. With that said, let me know what you guys think about this information down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.